A very good afternoon, ladies and gentlemen, and thank you for joining us for this discussion talking about taking your company from private to public. And I've got two esteemed gentlemen with me who have recently had the experience of taking their company public, and they'll further share how they timed it, how they planned their narrative in terms of the market, and what's the next stage of growth for them. So, Arun, I come to you first. You operate in a space which is hospitality largely, and a space which is very season driven. So, how did you time your IPO in that market?
Thanks for having me on this panel. Pleasure to be in Delhi. So we've been a public company now for exactly 10 years. And the reason we went public is we wanted to build more amusement parks, and obviously we needed more capital. And that's the reason why we did it. So it's still a nascent industry, the amusement park and allied hospitality industry in India. So we felt that there was no right time or wrong time. In fact, we went public in March 2014, just before the big election that happened, and the current government came to power. So it was a very uncertain time. In fact, for the previous 13 months, there was not a single IPO that went through. So it was quite a tumultuous time. But at the same time, we had projects to finish, and we wanted to list the company as soon as possible. So we didn't really wait for an opportune time. There was a lot of uncertainty at that time. Our valuations took a little bit of a hit, but I think in hindsight, it was a boon for us. I think we were the first IPO to go through in 2014, and I think it's been an amazing journey after that. We've successfully completed a QIP in last December. We raised another 500 odd crores, 540 crores. So it's been a very interesting journey since we went public as well.
Okay. But how was the pressure like? Like you mentioned, you were the first one in 2014 to go public, and now, every other day we are seeing so many news of companies going public. Do you think you could have timed it differently, or 10 years down the line?
I think it's hard to time an IPO because the markets are very unpredictable, as you can experience it now as well. But I think once the company is ready, relatively ready, and everything is in order. But it also depends on your business decisions, like how quickly do you want the capital to be raised, and what purpose you're going to use the money for. Those I think, would be more important considerations than timing the market. I would say that if the business case is strong, and if your product and your service is strong, and there is a great growth potential, definitely an IPO is in order.
Okay. I will come to you again. Harsh, coming to you. You operate in a space, recently where we have seen a lot of co-working spaces suddenly opening up themselves to going public. So what was it for you when you felt, okay, now it's time, right, for going public?
Thank you so much, firstly, for having us here today with such a distinguished panelist as well, and very esteemed, crowd. It's been a very, very interesting journey, I would say, over the last year, since we started the entire preparation for IPO, the IPO process, and the life after IPO. Mm-hmm. And the aspect that you obviously mentioned about several companies in this space also together, one after the other, going public. In our mind, it's in fact a phenomenal validation about the opportunity. And the more the merrier, because it informs the larger public and the investor community that the pie is in fact very big, and it's not a winner takes all. What becomes very important is not, in this entire context, the timing. We would like to perhaps demystify the myth that you can time the market. The only real thing that you can time is your readiness. And when you're going public, it's like that skydiving, where you're ready to take the dive and realize that you cannot midway go back to the plane. The only thing you can do is to have a parachute, and the parachute really is to be completely ready, because public markets can sound extremely enticing, but the public market is also very unforgiving. So you need to recognize that The only time you can actually go public is when you are ready inside the building, not when it's actually sunny outside. You cannot really negotiate your valuation, you can't negotiate your readiness, you only can negotiate your reality. So for us, it was incredibly important that we craft a very compelling story, and the story has to be so simple that you can actually keep repeating it in the Uber ride. And if you can actually beat that, then you know that the public is going to understand your story very well. Because in reality, the public is and the investor community is more intelligent than all of us together, because it's a sum of several information pieces. So therefore, our only advice to the founders would be, don't overcomplicate the entire journey. You cannot time the market. You can only time the superpower, which is your readiness. And that for us was a few years of preparation, almost building that IPO data room 2.0, where you had all the KPIs with all the owners. You had Deloitte as an auditor who sort of signed off on each of the aspects. And you had an entire team which challenged each other that how can I actually create a very compelling story. And for us, as we challenged ourselves, we realized that there is a category in obviously an overcrowded space, but what we had done was to pioneer a new category. And how do we build a story around that, and obviously leave rest for the market to judge.
Sure. Interesting. So both of you have got interesting case studies in terms of one where other companies in the same bracket were also going public, and yours, I mean, in that case, being the first one in 2014 to go public. And again, amusement parks as a market was not very popular at that time in terms of why it's going public. So what was the narrative which you built?
I think we represented an industry that, I mean, we still do. That's still a very nascent industry in India. It's still a growing industry. Amusement parks are still not where they should be for a country of 1.5 billion people. It's almost like a social infrastructure business, but it's also very high capex, and like you said, it's also seasonal. So how do you kind of balance all that and then show consistent performance, which is important if you're going to go public, and you should have a clear growth plan as well. So, like my friend just said, you need to have your business in order very thoroughly before you even decide to go public. So I think that that takes care of a lot of the uncertainties and the pressures. But one of the great things about going public is also that your whole organization kind of rallies, understands the seriousness of going public, and the performance that and the growth that we need to show to the market. So in that sense, I would say it really kind of aligns the organization better, especially if you have your leadership team aligned properly. Also, I think it's a great wealth creator for a lot of employees in our company. And so I think definitely there are a lot of pluses of going public in that sense. But doing a quarter on quarter reporting and making sure that you are able to give numbers, it can be a lot of pressure for a lot of companies, especially for smaller companies. But I think if you can weather that and show great performance, I think it works out well.
Sure. Harsh, what was the narrative you built?
Look, as we think about the IPO narrative, we need to recognize that any IPO story is actually fundamentally built on three important pillars. Pillar number one is the differentiated story that you're communicating to the market in very simple terms. So commercial office space in India has been going extremely strong for the last decade. And within this, suddenly this new category gets created of flexible workspaces, which rises like a phoenix. And in no time, in less than a decade, which by the way includes 2 years of COVID, is almost 10% of commercial office space. Yeah. So just to contextualize, India had about 100 crore square foot created in the last 75 years. And the next 100 crore square foot is actually going to come in the next 10 to 15 years. So everyone appreciates the macro story, but you can't sell a macro story. You need to sell a micro story, which is where we were able to communicate to the market how we pioneered creating this managed campus model, where to large enterprises, Fortune 500 companies, in less than 60 days, you could create a modern workspace, which is more cost effective and at the same time keeps their employee very, very happy. So while the clients are very happy in the platform, it made a lot of sense as a business, because while we were the largest at scale, we were also very profitable, and we were creating a lot of cash flows. And the market loves profitable, scalable businesses, which creates a lot of cash flows. So once we were able to continue iterating the story and get to the three buzzwords, which is speed, efficiency, and cash flow, then the narrative got created through that process. So you need to start with a perspective and then iterate and eventually make it very, very simple, because simple stories sell the most. However, we do also recognize that you cannot get an IPO, because there is a journey post IPO as well. Because if you're trying to build a long term story, your journey has only started. And we, in our mind, think that IPO is only a full stop, or rather, only a comma, not a full stop in the entire journey. So the two more important aspects, which often times does not get as resonated, is the fact that number two, you need to have a proof in numbers, because you cannot get away only with a narrative, because your narrative is going to fall short if the proof is not in the pudding, which is your numbers, your metrics, which not only get reported, as Arun was rightly mentioning, right? Every quarter you need to report that. So you need to have that quarterly candor, but you also need to be very clear as an entrepreneur that you don't want to get bogged down by the quarterly pressure, because you want to have that annual ambition. Because without having that annual ambition and building a long term story, you might win the IPO story, which is to get listed, but the journey after that is when you really have the large compounding stories emerge. And finally, the third pillar, which I mentioned earlier as well, that compliance and governance is your parachute. You don't know when you'll need it, but the market is very unforgiving. So if you're not ready, then don't go public, because there are bigger problems if you're non-compliant and non-governant, because that's going to actually take entire squeeze out of your entire story. So narrative is important, but don't forget the other two pillars.
Sure. If I could then go back and understand how's life post IPO, how are you managing the pressure?
It's liberating. So it depends on how you actually take the pressure. We see it as a phenomenal trust that the market has actually given us, whether it's one shareholder or a very large mutual fund or a institutional shareholder, that they believe in your story. They believe that you'll be able to create a lot of value for them. So you just re-gear your entire organization, where you take it as a challenge that now that I've become ready and I've listed, I have in fact got a phenomenal opportunity that capital is available at a tap. And if you continue delivering your numbers and continue building the story, perhaps short term you can't control, but you trust the process that the market is more intelligent than all of us, it will reward you, which is where we see this not as a pressure. In fact, is a long term liberation process if your fundamentals are strong and you continue delivering the numbers that you've promised.
Arun, do you buy into that? Is it liberating?
Yeah, I think I would not say liberating is the right word because there's a lot of pressure. Like I said, earlier, there's a lot of quarter-on-quarter pressure. But I think definitely once you get used to being a listed company, and once you get kind of get into the stride of things, I think it is in a way liberating as well. I don't see, like Harsh said, I don't see it as a problem, having to do quarterly numbers. Although some countries now are going away from doing quarterly numbers to half-yearly numbers. But I think your value proposition, your story, your growth plans, and like Harsh again said, your compliance has to be on point, because you never know when it's going to come back and bite you. You hear a lot about the bad stories that come out in the press about governance issues and things like that. So you definitely want things to run as as clean as possible, so that you can weather these kind of issues. You never know, it could be SEBI or it could be any other regulatory issues that can suddenly crop up. So governance is definitely one of the important things. But of course, your growth plan is the main thing, right? How are you executing your plan? Is this what you promised? Are you able to do better than that? Over a long term, I think that's more important. And long term wealth creation and value creation, I think, trumps everything else.
Sure. So there are a lot of people in the audience who might be still thinking whether they want to go public or not. Any piece of advice for them you want to give?
I think enjoy your time as a private company for as long as you can before you go public, because it's a completely different, your business becomes a completely different beast after that. But it has its, both sides have its pluses and minuses. Uh, build your story, build your value proposition, build your growth plans, build your team. These are very important things before you, I think, decide to go public and have a strong roadmap, which is also very crucial.
Okay, but two, three things in terms of compliance, I mean, they should be prepared for.
I think compliance, I think once you have good auditors, good partners working with you, a lot of those things will, be automatically get sorted. But of course, you need to also, as an entrepreneur, have a strict guardrails on what you will and what you won't do as a business. And I think, the ethics and the governance of the company within your organization, not just for the outside world, also has to be on point, if you ask me. Yeah.
Okay. Harsh?
Keep it simple. Only do the IPO if you need to do it. There are beautiful businesses also built which are private. There should not be any FOMO around the fact that you have to go and list, because what people appreciate sometimes is the fact that IPO is a great headline. But as Arun rightly mentioned, there's a lot of twists and turns in the entire process. And obviously, he speaks with the entire wisdom of the last decade. We've just been recently listed. But however, we see it more as a challenge, that now you've got a great accountability and responsibility. So you have to make sure that while you continue delivering numbers, you're also delivering a lot of value to your shareholders. So the only advice would be focus on your business, focus on your fundamentals. If both of those are getting delivered and executed, rest will all follow in a process. You just need to be very humble, that market will reward you if you're humble in the journey and if you're well oriented towards the entire process.
So on that note, we open the floor for questions. Please raise your hand. And we have a question here from a gentleman. We'll just take one or two questions.
Hi, first of all, thank you so much for your insights. Actually, I just wanted to ask you that if somebody is running a marketplace, it's a service-based marketplace and it's related to the healthcare. We are at the stage of the expansion and we are looking for the fundraise. So should we go with institutional investors, or it's better to stay with the non-institutional investors as of now? And the second thing that right now I'm hiring for the higher positions. So should we proceed with ESOPs, or we should stay with the salary only, or like is there any other alternatives? Because you have built the big companies, so I would like to know about that.
Could you please repeat the question slowly, because I think there's a lot of feedback, not able to hear it properly. One question.
Okay, sorry. Actually, I'm running a marketplace by the name of hospcard.com. So we are a marketplace for surgical equipment and everything that a hospital need. So our marketplace is particularly bounded on the one code that everything that is manufactured in India should directly come from factory to hospital, and goods which are not manufactured in India should come from whoever is bringing it into the border from there to the hospitals. So I'm at the stage of expansion where we have already cleared the break-even period, and right now I'm thinking about the expansion. So should we proceed with institutional investment for that, or non-institutional investment? That was my question number one. And the second question that I wanted to ask, that right now I'm hiring more of team members. So for them, should we go with higher salaries? Because people who are leaving big LPAs and coming to my company, they expect me to do something extraordinary. So like what I should do? Should I go with ESOPs, or I don't know, you may suggest anything else?
I'll take the first question, I guess, and then you can take
Sure.
the second. So I think definitely go with an institutional investor first, I would recommend, because I think it kind of helps you kind of grow and then, structure your business initially, and have an outside investor, hopefully a reputed name, if that's possible. And then segue that into a listing later on, depending on your growth plans, is definitely the way I would suggest, because it just helps you kind of prepare yourself and your organization from being a fully private business to all the compliances, all the paperwork, the extra paperwork that happens when you become a listed company. This will be like a good bridging solution. Also, you are still not, you're not still bound by the quarter-on-quarter performance, which will be harder for a smaller company. So I think definitely go with an institutional placement before you think of going IPO is my recommendation.
No, great outcome in terms of what you're doing. It's a very unique product from what I learn. It's a war for talent, clearly. And when you are having a war for getting the best talent, they have to see value not only in terms of compensation, but in terms of the total reward philosophy. And from our personal context, the only learning that we can share is that you can't have a right or a wrong answer because it's very contextual on that individual. But there are enough instances of fast growing companies which eventually have ambition to go public, because if you're trying to get on board an institutional investor, it's also critical that you are the sum of the team that you work with. So if they get value creation, which honestly we've not seen is only possible through compensation, which is fixed in nature, so definitely having a combination of both is critical. And if someone really negotiates very deeply with you for his ESOP, his or her ESOP, then you definitely know they're really vested in your long-term success. So you should be very, very happy if you actually have that sort of an outcome.
All right. Okay. So with this, we would like to conclude the session. And thank you, Arun. Thank you, Harsh, for taking us through the entire process, which is more of a mindset, which you have to prepare yourself before you get into the IPO mode. And thank you for joining us today.